Good morning. So, again, we'd like to officially welcome you to this program by ARM Trustees. My name is Onanasa Gbagi, and we are grateful for you to be here. And we know that this program will be very impactful because we have a lot for you today. So we'll start really quickly by the welcome address. So I'll be inviting Inamdi to take the welcome address. Thank you.
I'm delighted to welcome you to this year's ARM Trustees Breakfast Meeting, themed Diversifying Your Estate for a Seamless Wealth Transfer. Now I will endeavor to clarify so that we all be on the same page as we go into this very interesting and well-packed meeting. That estate, as we refer to in this meeting, will not be narrowed down to the traditional asset that we are used to, that is landed properties. However, we will be targeting other assets that forms our estate that would mainly ensure seamless transfer of our wealth from generation to generation. Now, as I welcome you, I would want us to consider one or two facts that will best prepare our minds for this meeting. And I will take a hint from a publication made in March edition since Tax Digest, which has it that, that's 2018, which has it that in the United States, about 70% of wealthy families lose their wealth by the second generation. It even gets worse because about 90% lose their wealth before it gets to the third generation. Now in Nigeria, we can estimate that about 90% of wealthy families lose their wealth even before the second generation. Now that's scary, right? But you need not worry because ARM Trustees are here for you. And that is the essence of this meeting, to enlighten us, to educate us, to open up our minds to other opportunities that will help us seamlessly transfer our wealth from generation to generation. So I congratulate you for this, making it to this meeting and making our time to be here. Today's session promises to be insightful as we will be discussing two important issues at the center point of estate planning. We'll be discussing estate diversification and seamless wealth transfer. I'm convinced that every second we spend at this meeting will help us make better estate planning decisions. As you know, ARM Trustees is the foremost fiduciary service provider in Africa, vis-a-vis providing estate planning, management services, wills and trusts, offshore financial services, amongst other services. Irrespective of net worth, religious background, geographical location, our services are tailored to attend to your estate planning needs. With an excellent service history of over 25 years, garnished with global partnership and collaboration, ARM Trustees is a company that prioritizes optimum satisfaction to its numerous clienteles through varied service delivery system targeted at creating seamless wealth transfer. So, ladies and gentlemen, as a matter of fact, we pride ourselves in the solutions that we provide to our esteemed clients on a daily basis. So we come to the present day Nigeria and globally. Amidst political uncertainties, inflation, as well as economic challenges, it behoves on every individual here to reflect on the future and appraise their respective estate planning strategies, especially as it relates to wealth preservation, transfer, and diversification. Therefore, how best can we as individuals maintain our wealth and even pass them down to the future generation? Now, the answer is not far-fetched. The word is diversification, but not just a word, it's a plan, a very expansive and elaborate plan that makes us consider beyond the traditional scope of the places or the assets we normally consider to invest in. We define diversification as the strategy of spreading out money into different types of investment, which reduces risk while allowing your money to grow. Research has shown that diversification is the most important component of reaching long-range financial goals while minimizing risks. I think at this point we'll be thinking of embracing diversification. It therefore pertinent to note that current status quo regarding the economy demands that we upscale further investment opportunities, putting into consideration cost effectiveness in taxes. We would agree that the traditional modes of transferring our assets have now become tax cumbersome. We would have options such as international life insurance, art acquisition for art lovers, and migration investments, as well as other offshore investment opportunities. Thus, as parents, guardians, sponsors, breadwinners, or whatever description the society and linguists will ascribe to us, we must all possess objective responsibilities for succeeding generations and diversifying our estates to provide value and support for our loved ones. We must not be careless, and we must consider seamless means of taking care of the future generations. At ARM Trustees, we have carefully selected experts and solutions that works for everyone here. Someone might ask, how do you know what works for me? Because you are a priority. We've taken care of considering your profile, your resources, and hope that at the end of the day we'll provide solutions that best works for each individual seated here. Irrespective of the complexity, size, or natures of your estate, we have the best resources and experience to help you diversify, maximize benefit from your assets, and guarantee seamless transfer to your next generation. I hope we are all ready to embrace this. This event is an initiative drawn up to boost awareness on the importance of estate planning, as well as wealth preservation through diversification. In this age, being an adult without an estate plan is like sitting on a keg of gunpowder. You know, I'm mindful of the common parlance. An adult in this age without an estate plan is sitting in a vehicle traveling to a destination unknown. Perhaps we better define that destination. On this note, ladies and gentlemen, I welcome you to this interesting session. Aside the breakfast, we will be having a fireside chat to engage our highly experienced panelists on strategies in which wealth can be diversified and seamlessly devolved to the next generation. Our carefully selected panelists are seasoned professionals with vast practical experience in cross-border investments, succession law, onshore and offshore fiduciary services, arts, and financial services. Whilst I wish you a highly educative and interactive session, I thank you for attending, and I urge you all to devote undivided attention for the next couple of hours that we would explore the topics for today. You would all have your time and access to ask questions at the appropriate time. For now, I welcome you once again. Thank you very much.
We want to welcome everybody again. It's a pleasure of ours actually having you here. We're ready to fly. We apologize again for the time we've taken so far. First of all, we're going to have a presentation by Sven Nicholas Hodenschild from IPG Howden. A little profile of Mrs. Sven. Sven is an estate planning consultant from Zurich, Switzerland. He's currently the first vice president at International Planning Group, a recognized leading Swiss company known for the development of international life insurance for HNIs and proffering benefit solutions for companies worldwide. Please put your hands together as we welcome Mr. Sven.
Okay. All right. So I guess it's a natural fit to trust business, as it's about family, estate, wealth preservation is a natural fit with our core business, where we tackle exactly the same obstacles. IBG Howden, the company I do represent, we're one of the preferred and leading companies worldwide, advising high net worth clients globally on estate planning, but more important on life insurance, family and wealth protection. We are the preferred partner of every major international private bank, but also local trust firms, law firms, family offices. So we work mostly in a B2B environment. Our partners identify the client needs, call us as a specialized advisor, and as a team we're able to implement a solution for our clients. We do that globally since 45 years, being headquartered now in the UK, formerly being headquartered in the US. To give you some numbers, as a life insurance specialist for high net worth clients, we are placing $1.5 billion premium a year. We placed 50 billion premium total in the last decades. And more important, we do have a client retention rate of 97%. That doesn't mean that the advisors are the best, but it shows something. It shows that the solution we offer are flexible, because these are long-term solutions and needs are changing. So does our solution. So we are able to adjust every single plan during lifetime to cope with the changing needs of our clients and to ensure that the plan fulfills the requirements and targets of our clients. That's very, very important to us. Being part of the Howden Group, big company, 90 countries. Well, what a crazy world we're living in. Last presentation we had here, it was end of 2019. I guess a few of the clients were present. The world looked different, right? The world looked different. It was a very positive outlook. It came different than we expected, right? It all started with the COVID pandemic, an event which the world has never seen before, right? We were scared, we were losing loved ones, health, family protection was on top of everybody's agenda. Markets crashed. Due to the crash, we also see lockdowns, production gone slow, logistic issues, global supply chain bottlenecks. And when the time is recovered, that stupid war started, which led to increased energy prices, commodity prices, and altogether we led to one of the world's most severe economic crises, especially since 2008. But it's more looking at the financial data is more severe than that, because since 8 months the markets did not recover. Usually, based on statistics, especially stock markets recover 1 to 2 months after crash. Now it's 8 months. We're in a low situation. And talking to a specialist, investment specialists, we don't see the markets to recover. So what's happening as a consequence of all these turbulences? I mean, I don't need to tell you, inflation, 22% in inflation in September in Nigeria, but it's not only a Nigerian phenomenon. We see inflation 10% in the US, in the UK, also in the Eurozone, a bit less in Switzerland, luckily, but it's a phenomenon affecting the entire world, and obviously, especially the mass population. As a consequence, interest rates were rising. That means money becomes more expensive. That means less money in the market, which has a negative impact on the economy. Naira versus dollar. Sad story. I guess it's on a global scale. Naira does even worse against the dollar, so it was even more important to have dollars or money outside the country. Whatever dollar is outside the country compared to the Naira would have appreciated a lot. Then on the stock markets, and I was talking to my CEO yesterday, we don't check our accounts anymore because it just goes down since beginning of the year. But not, and that's the worst part, not only stocks. So I'm a big fan of a balanced portfolio because balance means provide security, right? So having stocks, but also bond funds, that was key to me. But what was happening this year? Everything went down. And to me, I didn't understand, so a few bankers explained me, bond portfolios went down because of the inflation, the increasing interest rates. So I thought I do have a balanced portfolio which gives me peace of mind for a long term, but now it came different. Everything is down by 20%. So as a consequence, what options are available? As our friends already mentioned, I guess at the end of the day, it's all about diversification, right? What we learned by advising high net worth clients, our clients, they care. They first, most important, care about their families. But secondly, obviously, they also care about themselves, about their money, because they were working hard throughout their career. They were able to be very successful by being smart, working hard. They accumulated a lot. What they don't want to see is their wealth being eroded when handed over to the next generation. But also, of course, they want to enjoy that wealth at their third life phase when it comes to retirement and pension. So I guess finding a solution which can help to protect their families, but also preserve wealth and still accumulate wealth for self-consumption. This is something we want to achieve by offering our solutions to our clients. Now, if we talk about life insurance, you may say, okay, life insurance, I'm wealthy, I don't need life insurance. Yeah, that's actually true. Of course, you don't need life insurance. You may have 50 million somewhere, but looking at the benefits this solution can offer from a preservation, simplicity, efficiency, and diversification perspective, you may come to the conclusion that, well, instead of buying my fifth property, I take that money, buy an international life insurance, which provides so many benefits, which I didn't realize before, but let me integrate this in my wealth portfolio, especially held under an ARM trust. So how this solution works, because that solution is different to the solution you may know. The solution we offer has been created 30, 40 years ago in the United States to help the American families to preserve their wealth and not lose 70, 90% of the money when handed over to the next generation, as our introducer mentioned. Why are they losing their money, by the way? I made a little note, because this is an example which comes up. First generation, they made the money. Now, making money is difficult. You cannot expect that your children will do as good as you did. You cannot expect. No, if it's that easy and everybody could do it, there will be many more wealthy clients. So first and most important, I guess, nobody is as smart as you were to create that wealth. But when we hand over wealth to the next generation, let's assume we have 9 million and we have 3 children. So we hand over 3 million only. So we don't have 9 anymore, we have 3 million each. Then we may have taxes, inheritance taxes, we may have court cases, we may have family conflicts. And by that transfer, we dilute the wealth from generation to generation, not being able to accumulate more wealth. Hence, we need to find solution which can preserve that wealth for the next generation. And insurance has been created to exactly achieve this planning goal. What is different from our solution to retail life insurance, which you may already know? 3 differences. First, our solution is whole of life. So we set up the solution once, and that plan keeps going until the insured person is passing away. Now, we ask about certainty, but there is no certainty. There's only one certainty in life, that it will go and end one day. So knowing that certainty, that also means the $10 million or 5 million or 20 million, or you can ask me for 50, we can offer it. That amount will be there for the family. The question is not if, the question is when it will be available. And that gives you peace of mind. That gives whatever happens with your business, with the Nigerian economy, with the global market, that amount is locked in and will be there for the family one day. Tax-free, US dollar, outside the country, immediately available. Secondly, there's a premium to be invested, right? To be honest, 10 million doesn't come for free. That premium is related to age, gender, health, and lifestyle. In that example, 50 years old Nigerian male, the premium is slightly below 2 million to be invested to generate 10 million lifelong. Now 2 million is a lot of money. And even though my clients are wealthy, super wealthy, many of them are asset rich and cash poor. So what options are available? So the minority of my clients, they say, okay, I do have the money, cash, sitting around. I put that aside for my next generation. But the majority of clients ask me, Sven, what can we do? What options are available? What options are available? So there are two options. First, we take a loan. Similar to a mortgage, if you buy property, we take a loan from a bank or a specialized loan provider to purchase the premium. So you only participate by 25%. The bank gives you 75%. That leads to 2 million, and we generate a 10 million plan. So insurance premium financing, taking the contract as collateral, similar to a property, mortgage, property as collateral, exactly the same. Every major private bank is supporting this. The UK banks, the Swiss banks, Dubai banks, most of these banks support such a transaction. If you don't like loans, if you're over-leveraged, if you believe interest rates are too high, which they are these days, we may want to set up a funding plan. So instead of paying the premium in one shot, we set up a plan to fund the premium over 5, 10, 15, 20 years. Whatever we define today can be adjusted tomorrow. If you have an inflow after 5 years, you can pay off the missing premiums at a discounted rate. If you're short in 5 years, because there's another more important project, you can skip 1 year premium. You can just pay half, you can pay delayed. So it remains being very flexible. So at the end of the day, what we tell our clients, there is always a funding solution. The premium is linked to the coverage, of course, and the client's characteristics. But with the support of banks and the flexibility of this solution, we will find a strategy to support your plan to ensure we can set up a solution which fits to your financial capabilities. Thirdly, and this is most important, especially when it comes to diversification. Different to every other insurance where you pay annual premiums, here you invest a premium because it's actually a pocket out, pocket in. We take the money from a bank account, give it to one of the world's largest insurance company, and they will open an insurance savings account in your name, the insured person in your name. You define from a selection of underlying investment strategies which investment strategy is most suitable. You want to go equity, fixed interest, combination, you choose, it's your decision, but every dollar invested will remain in your name, insurance savings account, and will accumulate and generate income during lifetime. So if you invest 2 million, that 2 million will grow over time, managed by one of the world's largest insurance companies, mainly Canadian companies with strong ratings and successful track record. Now, at any point in time, that cash can be redeemed. So during lifetime, it's a savings plan. During lifetime, it's a solution to diversify your wealth. If needed, you can access. If needed, you can take a loan against. But obviously, if something happens to you, the big payout goes to your family. Interestingly, insurance works as a trust. It's fully protected against creditors. If you have creditors, you have authorities, governments chasing you for your money, nobody can go after this money. It's protected by international insurance law. And obviously, it's an immediate and silent confidential payout. If you may have a complex family situation with a first and second wife, with children from different wives. So this is a silent testament. You nominate the beneficiaries with a percentage. Beneficiary A will not know from beneficiary B, but it will be immediately paid out without court cases, without taxes. To many, many, many of our clients, this is just peace of mind. This is just peace of mind. Put that money aside for the next generation, and that's important, especially in the light of current turbulences. So the main needs we are facing when advising our clients is obviously, it's about the family. It's about the family. Every client you ask, what do you care the most? It's the wife and the children and the family. Secondly, it's the money, of course. But family protection to protect the family against the unexpected. Once again, we all know it. We don't know what can happen in the future. Having a solution which pays out immediately, that's just peace of mind, right? You know you did the right thing to protect your loved ones. Wealth preservation, put money aside, next generation, to preserve what you have accumulated, to preserve, to multiply your wealth, to secure your wealth for your loved ones, in combination with estate planning. I guess that's the topic of today's presentation. In combination with ARM Trust and IBG as your partner, we can set up a solution to plan for your estate and to preserve your estate and legacy for the next generation. Asset diversification as an alternative solution when markets or other investments are maybe not that beneficial. Insurance provides you with guarantees, with guaranteed peace, guaranteed payout, and definitely peace of mind. And interestingly, liquidity, because liquidity is a topic which we should take serious. As most of our clients are asset rich and cash poor, most of them have liabilities, right? You have mortgages, debts, maybe personal loans on the business, but also maybe UK real estate. Now, whatever value you have in the UK, there will be 40% estate tax. Now, if something happens to the patriarch, the banks will ask for that money, and the tax authorities will ask for that money. But maybe there's not enough money left. So the family needs to sell stocks, real estate, company shares when markets are down. So it's very important to ensure at every point in time, what are my liabilities on my estate? And what is the cash which is available? So you don't want to leave your wife or your children struggling with paying all these claims, selling some of the assets when markets are down. So you want to ensure that enough liquidity is available to cover these liabilities. And of course, cash from an insurance can be used exactly for these purposes. Well, what we recommend our clients working closely with trust companies, but also banks, is just carefully review your portfolio. Obviously, we do have, most of our clients have shares of their businesses. Most of our clients have real estate, which is all good, we love it. But also looking at the portfolio, the investment portfolio, which usually has cash, bonds, and stocks. Unfortunately, these days, as mentioned, cash is losing value day by day by day. Bonds, we have the default risk, but also this year, the new phenomenon that also bonds can go down, and stocks is volatile anyhow, right? So we advise our client to review your portfolio with the ambition to rebalance and de-risk it. De-risk, and there's a very simple strategy how to de-risk and to rebalance. What we advise, maybe take some of your cash available. Take some of your cash, which is losing value anyhow, take that cash and invest it into a life insurance. If the portfolio is worth 20 million, we take 10%, 2 million. At age 50, we generate 10 million payout with a simple transaction which saves you money because you don't lose all your cash anymore. We increase your estate from 20 to 28 million. So we take 2 million from your cash, we generate the 10 million life insurance with guaranteed payout. And this is what we advise our clients. So we strongly, strongly believe next to your company shares, to your real estate, to your liquid portfolio, we strongly believe a life insurance is a must-have for a high net worth clients to preserve wealth and protect their families. In a nutshell, to sum up, the solution we offer, it's a solution to plan for estate, for liquidity, for wealth. It's a solution to invest, because you can achieve decent investment gains for you available during lifetime. It's a solution to protect your family, most important, and to protect your wealth. But it's also a solution which remains flexible during lifetime. We are here as your partner. We will service the policy on an annual basis to ensure that whenever your life and needs are changing, we adapt the plan accordingly. So thank you very much for taking the time. We remain in town till next Wednesday evening. And ideally, we may arrange for an individual meeting with our ARM partners to listen to your needs, to your setup, to your financial ambition, and maybe find one or the other solution to support you and your planning goals. Thank you very much.
Thank you very much, Sven. It was a very enlightening session. Whilst he was speaking, I was able to take some notes down for myself too. All right. I recently got married just about 3 months ago. And I didn't know that my outlook to life can change very quickly the way it changed now. I've been promised more change now, right? And, I have a client who I would usually meet, at an eatery. But right now, I'm looking at, okay, we may not be doing that so much. Right. Thank you, sir. Right. So, perspective to family. There are some things that it's not just about you anymore. It's now about those that you love and how you want to protect their affairs when you're no longer in the picture. Liquidity, family, and wealth preservation as well. With the way the numbers are looking now, we really want to be open-minded and begin to diversify. We don't want to put all our eggs in one basket. And the truth is this. As we get into the next session, where we'll be talking about diversification as it really is, you will know that, or you will notice that I can do a lot more than I am doing now, and I can actually afford to do these things with ease and some form of convenience. So we're moving on. Thank you very much, Mrs. Van. Again, it was a very enlightening one. We're going to be introducing our panelists now, and they're going to be talking to us, discussing diversification in its entirety. I have very professional, I have professionals who would be speaking and vast in their fields, knowledgeable, and really here to bring us into the light. First of all, I'd like to welcome Waimi Orisha Jaffo. She's from Henley & Partners. She's a consultant at Henley & Partners, a firm of professionals who render advisory services to HNIs about gaining resident and or citizenship in their country of choice through qualifying investments. Let's put hands together for her. You're welcome, ma'am. Thank you very much, ma'am. You are welcome. Oh, and where? It's fine. You're welcome. We'd also like to welcome the Chief Curator of Bloom Art Lagos, Ugoma Ebila. I apologize if I don't get the pronunciations correctly, please. We'd like to welcome Ms. Ugoma Ebila. She's the founding director and chief curator of Bloom Art Lagos, where she has curated and produced art exhibitions with other professional artists. You're welcome, ma'am. You are very welcome. I particularly took notice of your dress. Looks really good, right? It speaks to what she does on a daily. You're welcome, ma'am. Yes. We'd like to welcome Ms. Gaia Vitz. I hope I got that right. She's the Chief Executive Officer of IPG Howden, Europe, Middle East, and Africa. She traveled, a long journey to get here. So I'd like you to really put your hands together. She's a wealth management and insurance professional. You're welcome. And she has over 15 years of experience in high net worth and ultra high net worth life insurance industry. and she joined IPG Howden in January 2021, and she's the current CEO of IPG in Howden, Europe, Middle East, and Africa. You're welcome again. It's a pleasure having you here. We would also like to welcome Ms. Mofuluke Keshinro. She's the head of private trust business at ARM Trustees Limited. She's a certified trust and estate practitioner and a full member of the Society of Trust and Estate Practitioners, and has a broad experience in generational wealth transfer, succession planning, and legacy preservation. Ms. Mofuluke, you're very welcome. A pleasure to have you here. We'll also like to welcome Ms. Yemi Carey, CEO, Hekabella Limited, partner, Holman Consulting, and co-founder, it's a huge portfolio, co-founder of Rising Tide Africa. She's a partner at Holman Consulting and co-founder of Rising Tide Africa, a women's movement initiated with a vision to increase women's participation in angel investing as an asset class, and promote education, cross-border investing, and investor mentoring across Africa. Can we put our hands together for her? You're very welcome, Mami. It's a pleasure to have you here. Last but not least, I would like to welcome our moderator for today, Ms. Onana Sogbagi. She's a wealth advisor with ARM Investment Managers Business. She's passionate about what she does with a track record of excellent service delivery, hence her presence with us today. Thank you very much. You are welcome. Can we put our hands together for them? Thank you.
Thank you so much, Iyosa. So you're welcome. Our all-female panelist session. So it's going to be very interesting. So I would like to start with Mofuluke. So, just before we go ahead and talk about diversification, the simplest question or the base question should be, what exactly is wealth transfer? Would you like to help us with that?
Okay, thank you very much. Wealth transfer simply means, transferring wealth or assets to your beneficiaries. I often like to place emphasis on desired beneficiaries. Wealth transfer allows you to use tools of wealth transfer planning. Could be a trust, could be a will, could be foundation, could be a deed of gift. There are varied options available to you. But of importance is, the process that you adopt to getting to undertake the wealth transfer plan. So the steps you adopt to ensuring you craft or structure a seamless wealth transfer plan is very important. Thank you.
Could you highlight some of the benefits for us of having a wealth transfer?
Thank you, Ona. The benefits, first and foremost, you get to choose what your beneficiaries get, the quantum of what they get, how they get it, at what point they get it. You get to outline, in line with your desires, plans on succession of, if you have businesses, if you have, whatever type of assets, whoever you want to make provision for, could be charities, could be individuals, your company, legacies you want to perpetuate. You have the opportunity to outline it clearly. This benefit, and also tax efficiency, because in your lifetime, if you get to create the structure with an expert sitting with you, guiding you through the process, you are definitely going to ensure that these assets are not eroded before the beneficiaries get to enjoy them. Thank you.
All right, thank you. So my next question goes to Waimi. So we are currently in the what we call the jackpot season. So I guess my question is, a lot of people are processing second citizenships. What are the benefits of that in line with diversification?
Thank you. Thank you. So firstly, we always correct that misconception of what we do. We are not in the jackpot business. So most of our clients, vast majority of our clients, Nigeria and abroad, I'd say a good 95%, are not looking to move. What they are looking at is the plan B. We all know about the plan B. Well, we're also looking at plan C and plan D. We want to give ourselves and our children options. Everybody here is a global citizen. Opportunities come all the time. We want to get up and travel. We need to have a meeting. No one wants to be in that long visa queue, that process of waiting for a visa. That's where investment migration comes into it. So a second passport, and also we do residencies. So we have some clients who, they have their second passport already, but there might be the necessity to have a leg in Europe. If they have an American passport, they need to have a leg into Europe. They need to have a leg into Australia. We help with that. I will put this into perspective. Some of you may have heard about the Henley Passport Index. So this is published every quarter. And it is a ranking of the world passports according to how many countries you can access visa-free or visa on arrival. So the Nigerian passport is currently 100th in the ranking, and we have visa-free access to 45 countries worldwide. If I was going to process a Caribbean citizenship for a client, the Caribbean passports are very strong. They stay between 25 and 31 in the ranking, and they have visa-free access to 144 to 156 countries visa-free. So you're moving from 100 to at least 31 in that ranking. If we were doing a citizenship in Europe, say Malta, we'd be moving to number 8. So it's a game changer. I'll call it a game changer.
Okay, so just one more question as well. How does citizenship and residency planning fit into wealth planning?
Okay. So we say that, I'll call it investment migration, citizenship and residency by investment. We say that investment migration is just one spoke in the wheel of wealth planning. So you have your cash flow management, your estate planning, your investment strategy. Investment migration sits comfortably there. So most of my clients, let me phrase it like that, a big topic of discussion is their children, their legacy, the future. We don't believe that anybody should have to be limited by their passports. Most of our children will be educated abroad. Most of them will have opportunities to work abroad. You want your child to be able to experience the world, the whole world, to get up and say, I want to go to Australia and go. You don't want your child to be classed as an international citizen. You want to say, oh, my child is an EU citizen, my child is a global citizen. So in terms of wealth planning, we also look at your family and how you can build your wealth through your children. So as Sven said, the children, by the time the inheritance comes and the money is split, it's not what it was yesterday. However, giving those children the opportunity to go forth and build on that wealth, investment migration comes into it. They can access opportunities that they cannot with their Nigerian passports. You as the parents, you can access opportunities on their behalf in different countries because now you are truly a global citizen.
All right, thank you so much. So I would be directing my next question to Goma. So I just wanted to ask, so can art be classified as a class of investment?
Yes, the answer is yes. And I just wanted to also add to the introduction because the context is important. A curator, which is what I am, works with artists, but also works with collectors. And when you're talking about assets and investments and wealth, which is what we're all here for, is to understand that the role someone like me, or when you hear the word curator, or you hear art advisor, is basically trying to help create this wealth and organize this wealth. I will always speak to a Nigeria context, which is a very nascent place where art is concerned. It's really new. We're a 60-something-year-old country. Our art practices go back 2,000 years, but we have only just woken up to these art practices in the last 40 years. Our independence was the first sort of awakening, and now we're experiencing a second awakening, which has also been, I guess, fired by the global Black lives, Black art, Blackness conversation. And it's a very important one that people must be aware of so they can participate. It is not just an asset class, it's actually a high-performing, safe asset class if you know what you're doing. I often use, because art, again, and why I gave the context of my bio, that we can look at me in relation to artists, and of course the source is the artist, and so those relationships look very fun, hippie-like. You know, he made a joke about the dress, but it's as important as it is that I have relationships with these strange people. These strange people create important, beautiful things that other people who wear suits and, you know, don't look so strange desire very strongly. And this collective desire has created a serious economy that can make you wealthy and can help your children also stay wealthy and also give them beauty. So, yes, to your question, it is an asset class. It's an important asset class, and it will be a very big shame, like Nnamdi said, if we as Nigerians who have this amazing heritage and wealth are the ones who are not participating in the art business and art market, which the West has already started to trade in and capitalize on right in Lagos and West Africa and Africa. So I'm also available for those kinds of conversations. Thank you.
Thank you so much. Thank you so much. So my next question goes to Yemi. Hi. You look very festive, by the way. You look very beautiful. Okay, so I'd just like you to briefly enlighten us on what exactly an angel investment means and how best it can be used in terms of asset diversification.
Angel investment is an asset class. It is, you know, a lot of us have been doing angel investing for a longest time. It is a structured form of when your cousin or your friend comes to meet you for 5,000 naira to invest in a business. I will give you back when I make money. It's the same thing, right? So it is now more structured, and instead of you just giving them the 5,000 and expecting that they make the money, and even if they don't make the money, you start to look at different perspectives of it to see if you can, by giving this 5,000 naira, get something at the end of the day. So pretty much angel investing is investing in startups. People have different investment philosophies. For us at Rising Tide, it's investing in female-owned, female-led, gender-diverse teams and management. We are sector agnostic and pretty much look for tech and tech-enabled because it allows for scalability, it allows for flexibility, it allows for change in revenue model. So if I bring it down to the basics, a lot of you heard about Paystack. So in the early days, when we started angel investing, the young men came to us at Lagos Angel Network, and some of us invested a token, right, at that time, and well, we forgot about it. But years later, somebody says, I will buy you out and I will invest, and I think your value of your company is $200 million. And so I make a cut when they give me back my money based on the new value that that they have sort of valued the business for. So that's it in simple terms. Now, it is very important to know that, that's your cousin or your friend or someone that took your 5,000 naira may never bring it back. And it's the same thing with angel investments. We say that it's 1 in every 10 investments that will pay for the rest of the 9. So that is the statistics. However, as the ecosystem is growing, we are beginning to do a lot more due diligence and ensuring that if you're investing, you look at the team, you look at different things that will enable you have the confidence to invest in that particular startup, so that in 2-3 years time the value of that business would have gone up 1x, 2x, 3x, and then you can cash out when the big boys want to invest. So it's high risk, high reward, but you can lose your money. So that's the best way I can explain the angel investing.
Okay, so it actually leads me to my next question. Just a next question. So, how can an angel investor protect, their investments to be passed to their estate before, they eventually eventually cash out of the investment?
Okay. So for when I founded Rising Tide, we're only 2. And it was not because we wanted to do investments, it was because we wanted to help the women start to access funds. So I was part of Lagos Angel Network, and every time people come to pitch, they'll just be men. And if a woman comes, she comes as co-founder, and it's the man that will speak. And in a room, just like we are here, the men are always more than the women. So I'm happy we're doing this. And we're telling you how to diversify your funds. But seriously, what then happened is that there was one lady that came in, right, and she had a very good product, but she just could not sell. And so myself and Ndidi, who was my co-founder, said, look, gentlemen, just give us some time with this woman and we'll bring her back, which we did, because we coached her, we mentored her, we sort of showed her, she would come here with me and I would say pitch, and start to build her confidence. And that was the beginning of Rising Tide. So it was pretty much more coaching and mentoring before we started off as investments. However, we needed a pool of more people to be able to do, take on more entrepreneurs. So today we are 91 as of yesterday, members of Rising Tide Africa. Now, what we had to do was to set up a trust, right? I don't know all of the legalese, but we set up a trust which all of the members sign when they come in. Because we are also trying to increase women's participation in angel investing, we allow the women to choose which investments they want to invest in. So because if you are comfortable in investing in renewable energy, somebody that's doing agriculture may not want to do that. And to encourage them, we do that. So after all of the members signed this trust deed, thank you. After all the members signed all of this, plenty of lawyer work and all of that, then for each investments, those that have decided that they want to invest in that particular startup will then sign another paper. Some contract, yes. Contract in between. And so for someone like me, because I own Rising Tide Africa, or is it own shareholder and director, so the shares are there, because it is in my will, right, that all of my shares in Rising Tide Africa are owned by I won't tell you. Then Now, I had to go and add in my will that all investments that I have done in Rising Tide Africa, whenever they are mature, would also be part of my will, and the investments or whatever comes out of it, dividends from it, would then go to that person. Yes, that's how I've done mine.
Okay, so in summary, a trust, right? Mufuluke, you want to add something?
Yes,
Please go
thank
ahead.
you. Thank you very much, Yemi. Just to put it in perspective, Yemi's scenario is such that she created a structure that would kick in when she's no longer in the picture, a testamentary arrangement, a will. But there are situations where the individual wants to see it run in his or her lifetime. A living trust can be created. Yemi's investment in Rising Tide, the benefit would accrue to the trust created, and the designated beneficiaries, whom Yemi is unable to disclose at this point, would enjoy the benefits that accrue. And the beauty of it is that in the living trust arrangement, Yemi herself could also be a principal beneficiary. So she would enjoy benefits that accrues, be it dividend, be it bonuses, as it, applicable. And a situation where eventuality happens, there is no gap. There's that seamless transition, such that there's a structure already existing. So all the beneficiaries do is just take benefits. They don't have to wait until the grant of probate is obtained in the situation where a will is written.
So in other words, it's flexible a bit.
Absolutely.
Fantastic. So it brings me to my next question, to Gaia. Hi, good morning. Okay, so, just taking from the last speaker, in terms of flexibility, I know that Sven had spoken a lot about the estate planning services being a whole life plan, right? So how flexible is that in terms of offering that services, throughout an investor's lifetime?
Sure. So I think most of the time we get the objection when our clients do buy these policies that 10 million is not for them, it's for somebody else. And they're like, well, what's in it for me? How can I benefit from this? So that flexibility that the policy actually provides is there from the very first day. If somebody did change their mind, they could actually surrender the policy on day one. But like what Sven showed earlier on, we have a retention ratio of 97%, which means people who have bought these policies truly see the benefits of it and they're keeping it. Having said that though, that cash surrender value is not sitting there idle. It is being invested in a very prudent manner by the insurance company. So that cash value is something that you can access if you really, really need to. So that liquidity need could come during your lifetime, and it's a value that's growing on a year-on-year basis that you can have access to. If you don't take the premium financing option and you put down cash to pay these policies, or you pay the premium on an annual basis, you can actually use this policy as collateral and go back to the bank to say, hey, lend me some money against this. So that flexibility of raising cash against the policy is always there. And since most of our clients are entrepreneurs and business owners, there's always personal guarantees in order to acquire credit facilities. Now, personal guarantees means it's the money that you have built for your next generation. It's that legacy that you want to leave behind. So is that really the money that you want your creditors to have access to when things go wrong? So instead of actually giving personal guarantees, our clients would use this life insurance policy and pledge that in lieu of the personal guarantee. So although it is a simple solution, the way that you can actually use it for your planning needs and changes forever. We used to have financial crisis that happens every 10 years. Now it's every 2 years, right? So that volatility is genuinely driving people mad. So knowing that something, yes, I have something this is till age 120, but I can have access to it at any given point of time, gives a lot of our clients that peace of mind that this really benefits them.
Okay, thank you. So some of the things that were also mentioned were solutions, such as, I had to take some notes, increasing savings cash value, insurance premiums, flexible funding strategies. So my question is, how can these solutions, how can these policies, be essentially used as an estate plan
Sure. So essentially what we're creating for you is liquidity. In the worst case scenario, should something happen, there is a payout of $10 million or $20 million. Most of our clients are breadwinners, so let's say you're 40 years old, you're planning to work till you're 60, and let's assume you're earning $1 million. But God forbid something happens to you tomorrow, that's $20 million of income that your family has actually missed out on. So from an estate planning point of view, you've set up a lifestyle for your family and you want that to be maintained even if you're no longer there. So this life insurance policy will enable to make sure that the lifestyle that you've set for your family is maintained in case something happens to the breadwinner. Most of you would have UK real estate. Everybody loves properties because it's something that you can look and touch, and of course it does go up in value. But again, let's take the UK for example. 40% of your estate in the UK will go to the government. And let's say you've got 3 children, then each of your 3 children will actually only get 30%. So is it fair that the government gets more than each of your child? Hell no, right? So the life insurance policy again will create the liquidity. It doesn't take away the tax liability, that's always going to be there, but it will create the liquidity so that the trustees, so for example, if ARM Trust held that policy, the life insurance liquidity will go into the trust, they will pay off the inland revenue, and the actual estate that you've created goes to your family. So again, wealth preservation and legacy transfer is what these life insurance tools will help you to achieve. So there's many different applications, but it's just one simple solution, and things can change as things progress.
Okay, so you spoke on limitations, especially in the UK. So I'd like to talk about geographical locations, right? Sorry, limitations.
Sure.
Are there any geographic limitations that may affect beneficiaries in accessing these benefits, from...
A very good question, because again, the whole point of doing such planning is to make sure that the beneficiaries get the money, right, without any hassles. So when we first started this business out in Asia in the early 1990s, we were only underwriting clients across 5 different countries. Today, we've got clients who are residing in over 70 different countries. So it really is a truly mobile international solution. And again, to make sure that there are no difficulties for the beneficiaries, we highly recommend our clients that they do buy this policy held under a trust, because at the time of a claim, the last thing you want is for your partner and your children to be calling the insurance company to say, hey, I need my money back. So that will be the responsibility of the trustees as well as us brokers to make sure that the money goes into the trust. If your kids happen to be in the UK or the US, which is typically the most high tax jurisdictions, life insurance policies are actually tax-free. Now, there's actually very few assets you can give to these kind of kids who are living there without any tax attached, apart from life insurance. So the geographical limitation is actually not an issue for most clients that we've met.
All right, thank you. Okay, so my next question goes to Waimi. So the question is, which country can I seek alternative citizenship, and what are the financial and tax implications of that?
Okay, so when it comes to citizenship by investment, currently there's 9 countries. 5 are in the Caribbean, and I'm sure most, if not everybody knows them. So you have Antigua, you have Grenada, you have Dominica, St. Kitts, and St. Lucia. Those are the 5 in the Caribbean for citizenship by investment. They are the most popular here in Nigeria. So in Europe, we have Austria, we have Malta, and we have Montenegro, although Montenegro is closing next month, so we won't talk too much about it, but Turkey is also an option. On the residency side of things, we have 21 countries and counting that we can get residency for you. But in Nigeria, we tend to talk more about citizenship, so getting a second passport. On the tax side of things, you have to be resident in that country for tax to become a conversation. It's not a major driver for most of our clients, but if you're concerned about tax, we always encourage you to engage with a local tax consultant. Now, when it comes to citizenship in the Caribbean, if we're talking about the financial commitment, we're looking at 2 different routes. So the donation or a real estate investment. So through the donation, the government asks, depending on the country, you are going to be investing between 100 and 150,000 into a government fund, I will say at this point that there is no return on that investment. It is a donation. So your return is that passport you're going to get at the end of the process. Now, I speak to a lot of people who say, Wemi, why would I take so much money and just give it to a government? I worked hard for my money. So we look at the other side of it, which is the real estate investment. So at Henley, when we talk about real estate investment in the Caribbean, we only work with 4-star and 5-star hotels or resorts. Yes, it's a bit more expensive, probably averaging about $80,000 more than the contribution, but there is an annual return. We look at between 2 and 5%. Nothing that's going to significantly add to your wealth. However, something is coming in, and at the end of 5 to 7 years, depending on the country, you can sell off your shares in the hotel or resort. But your passport for the Caribbean, we've gotten that for you in 6 months. So that real estate, you have to hold it for 5 years for your citizenship to be valid and renewed. But we've gotten you your passport in 6 months. If we look towards Europe, really and truly the best citizenship program worldwide at the moment is Malta. So a Maltese passport is number 8 worldwide. It has visa-free access to currently 188 countries, including the US, including Canada, including Australia. Now, the financial commitment for Malta for a family of 4, we're looking at upwards of €1 million. However, the advantages outweigh that financial implication. Malta is a member of the EU, so you will have the right to settle, to travel, to live in any of the other EU countries. If we look at Australia, Australia is great, but it's a higher financial commitment. We don't get a lot of people doing it, but there are people doing it. So if you were looking at, Austria, it's a €3 million donation or an 8 million or an 8 million investment. That's why it's not very popular, but we do have clients doing it. Turkey is a real estate investment. Only recently they've increased the threshold. It was 250,000. It's now 400,000. Or you could just deposit $500,000 in a bank account. That's Turkey. We won't talk about Montenegro because it's closing in 3 weeks. So on the citizenship side of things, which is what we do mostly in Nigeria, that's where we stand, those 9 countries. However, there is a trend that is emerging right now. Most of our clients in Nigeria are doing a combination of a citizenship and a residency, because everybody just wants to hedge whatever risks. You want to make sure, what if the Caribbean decides tomorrow that they're closing? What happens? I will have a document that's just not very useful. So they want to have a leg into Europe, so we'll do a residency in Europe. Portugal is very popular. Before I get into that, I will tell you popular combinations we're doing. So we have clients that we're doing a Caribbean with a Portugal with a Canada, a startup visa in Canada, all at the same time. We have clients who are already US citizens. This comes into conversations we have with clients who tell me, Wait, I have my 10-year US visa, why do I need this? Or I have my UK visa, my 5-year, 10-year UK visa, why do I need this? Well, we have clients who already have a US passport, but at the same time, we're doing a residency for them in Europe and a residency in the UAE. They're global citizens. So Henley has a tool that we just launched 2 weeks ago on the website. It's called the Ultimate Portfolio. So it's for our clients to just have a play around with, and you can build your ultimate portfolio, which is going to be a combination of different citizenships and residencies based around different parameters that are important to you. So climate change, education, security, different parameters, and just build your ultimate portfolio. Most people think, yeah, we stay at one citizenship, but no. we have people on their full citizenship, and then they're just doing an extra residency by the side, and they tell me I'll be back for another one. So the world is your oyster, really. It's really up to it's really up to you. The financial implications, we won't pretend that it is not financially, but the benefits, you will enjoy the benefits. Before I hand over the mic, I will say that once we do your citizenship or your residency by investment, that investment is only done once. Your generations to come will enjoy from that investment. So we do the investment for you, you achieve your citizenship or your residency, and then your generations can benefit from citizenship by marriage, citizenship by descent. It's only been done once, and that's the end of it. So your children, your grandchildren, your great-grandchildren, you've done it on their behalf. So they will be global citizens forever.
I like that. Thank you so much, Waimi. So this next question goes to Goma. And I'll just, piggyback off what Waimi was talking about in terms of transferring that or having that for your generation to come. So my question to you, Goma, is, what options are available for an investor that would like to maintain their art legacy once they're gone?
I'll give like a very good real example, because I know this is still, as I said, new ground and people are very skeptical. I have the pleasure of working with two family trusts of two very passionate art collectors. Professor Adeoye collected over 400 paintings in his life, and his sons are the custodians of those paintings. He clearly did the needful, which was to educate them about what he had, because a lot of people don't know. I'll diverse into a quick joke about an Elanatsui work. Elanatsui is a Ghanaian painter who came to Nigeria, has been here since the 70s, works in wood. It looks like pieces of bako, and his housekeeper threw it away because he didn't know, it just looked like sticks on the floor. And those are valued about £200,000 to £300,000, but it looks like sticks on the floor. So the danger of not even having an uneducated household is expensive. So go back to Adeoye. So these children know and knew. They formed a trust, and they essentially liquidate those assets from time to time. Part of it has gone into a trust for him. So they've liquidated some of those art assets to form a foundation which was passionate about sports, which the man was interested in. The household is still run every year. They release 3 paintings. They will have money forever, really, because there's so much art, and it was all amazing art. So he was also a very dedicated and intentional collector. So he bought modern and a certain level of art, so which the world now is highly demanding. A lot of it, I think, was luck, but I think that even though the entire art story has been one lucky one, those who were organized will always benefit and have benefited and will benefit, because now we're all learning as we go along. But the families where they've cataloged what they have, they've stored them properly, they've engaged the services of a curator and advisor to help them understand what they have, and then have the relationships with the auction houses or the galleries or even the private market to be able to divest of those assets. This is important, and it's very possible to do that. Another case which is real for me right now is a generational painting. There's a painting that came into my possession which has been owned by a father, handed over to his son. The son is not so passionate, and then had a very big wedding, needed to have a very big wedding, a massive wedding, and he brought that painting forward. And that painting paid for a huge, huge wedding. I mean, I would never sell a painting for a wedding, but that's my personal preference. But the point is that there's flexibility. These assets can make those dreams come true. assets can buy an art asset can buy you a house if you liquidate the painting, because it no longer, it doesn't mean as much to you as it did to the person who owned it before. It's very possible. I think transparency, education to the people who are your beneficiaries, and of course introducing those beneficiaries hopefully in your lifetime to the people who will be doing those services. But I think the biggest thing is sharing that knowledge and educating the people who are around you, because there are so many instances where the beneficiaries don't even know the value of what mom or dad or grandpa had. And we've seen, and it's just tragic. So a little bit of knowledge will go a long way, but there's a market, there's a local market, there's an international market, there's a very, very public market, there's also a very, very private market. There's a market.
Okay, so just one last question for you.
For me?
Yes. What are the tax implications of, owning art and with art collectors?
So again, this is, as I said, new ground for Nigeria at the moment, because we're still forming the space. And it's a conversation I actually wanted to have with ARM about the possibilities of us maybe putting together a pitch to, revenue services about making art a tax deductible space, right? Because it's what happens in most of the world, in England, for example. So apart from whatever the value of the art and how it adds to your inheritance values, for Nigeria this is not even an issue, because we don't have any of those laws. We're still just really swimming. It's wonderful, but at some point we're going to have to organize. Right now we're doing a lot of self-regulation. So I do not think that having art and inheritance package would have any tax implications. It doesn't at the moment. But I would imagine that if we were a country that had those tax laws relating to art, that even the inherited art would be safe from that, because of just how art is classified. It attracts, it's a tax deductible asset class. Philanthropy and things to do with social investments tend to be lower tax implications or tax deductible. But for now, we don't have those issues in Nigeria. So I still think that it's still safe to accumulate art assets and consider them as things that one can leverage pretty cheaply, but with very, very good yield.
Thank you so much. Just speaking on tax, I would like to ask Yemi, how efficient are for angel investments, are they tax efficient? How efficient are they?
For the startups prior, the Finance Act of 2020, give them some incentives for about 30% capital gains. However, the investors were not considered at all. But recently, we just like you, we had to build up. It took us about 3, 4, 5 years, and for people in the ecosystem to come together, and we worked with a couple of lawyers at the Nigerian Economic Summit Group. So you may want to go there. On the Nigerian Startup Bill, and we really had to canvass for it, and so it was assented to about 2-3 weeks ago by the president. And so in there, for angel investors, we have been able to get a 30% tax credit for angel investors or venture capitalists and those that are playing in the space to a cap of about 100 million naira. And so we're still waiting to implement. But prior to this, what would happen is that when you get your return on your investment, it would be calculated as a dividend to you as an individual. So there was no tax relief, but now we do have that consideration.
Thank you. So we just have a final question, and this goes to Mofoluke. How important is the choice of an advisor in planning, in estate planning?
Okay, thank you. I'm sure it's evident from the speakers. If you take, for instance, Ugoma, from what she's spoken to, if you have the right structure for your art collection, it will transcend second, third generation, even though it's evident that, you know, wealth doesn't get to the third generation. But with the right advice, the value of an advisor cannot be, you know, underestimated. You need an expert to guide you through your wealth planning process. You need a professional to sit with you, tax advisor, angel investing, you know, international life, you know, second citizenship. You know, when we're speaking to alternative residency and, you know, alternative citizenship, here it's just eye level. Speaking on the benefit is so long term, and there's a bigger picture to it. So the value of an advisor, it's critical. That's the first thing. If once you're ready to undertake a wealth planning process, you first decide who is the expert to guide me through this process. And I would dare say ARM Trustees Limited is available to guide you through the process.
All right, so thank you so much. I'd like to thank you, Waimi and Ugoma and Gaia, Mofoluke, Yemi. Thank you so much for joining on our panel today. And thank you.
Thank you, ladies. Can we put our hands together for them again, please? I'm sure it was a good one. If there is anything that I picked personally, you know, is the fact that you estate planning and then wealth diversification would help you do is that it will help you not just transfer wealth but transfer values. And I'll tell you why. You know, when she was speaking about the art curator, when she was speaking about the fact that, you know, art is not just past but education as well. You get to talk to your beneficiaries about the importance and the value of what you're passing on to them, so they don't just dispose and then eat. Because it's possible really to dispose anything and then end it. Art never dies, but the truth is that people can make do with what they want. So with an estate plan, with a solid estate plan as ARM would give you, and in collaboration with all of these other services, you don't just only pass wealth and assets, you also pass your values around these assets. I would like to call on the head of the private trust business, Mofoluke Keshino, for her closing remarks. Thank you very much.
Thank you very much, everyone, for your time. Thank you for staying through the sessions. And I believe we've picked one or two things. However, I would like to leave us with two things before we leave. First is, there's this expression, it says shirt sleeve to shirt sleeve, that in the first generation, you know, the father grows the wealth and he doesn't get to the third generation. I believe strongly, because I'm a trust and estate practitioner, that's what I do, that expression can be averted. Wealth can pass beyond the third generation. What you need is just guidance, right advice, creating the right structure, taking out time. Often what we do is we believe, you know, yes, there's no time, we sort of just put it at the back burner. But I would say to each and every one of us here today that will make it priority. The second thing, I don't know if anyone here has watched the movie adaptation of Professor Wole Soyinka's The Death and the King's Osman. Oh, apologies, I would like to talk about it briefly, spoiler alert. So the movie, I had the privilege of watching it over the weekend, and a strong lesson came for me. So I'm going to talk a bit about the movie. The king had passed, and as it was tradition in 1943, at the time in Oyo Empire, a nominated person must die, accompany on his journey to meet his ancestors. So a person, the King's Osman, was appointed, and he was happy about it. Well, he appeared like he talked about it. He was excited to take on the responsibility to honor his family and his lineage. And suddenly, he started making requests. Oh, please, I've seen a virgin I want to marry. Oh, please, put up a ceremony. Oh, after the ceremony, he says, no. He can hear the voice of the ancestors calling. However, he still wants to have some ceremony. So there was dance and a lot of, festivities. And they said, let's do this thing. Let's start this process, the rites. They had to kill some dogs, some animals, just to precede the rites. But he was still saying no. It was delaying. Then came the district councillor, a white man, who said, what a sacrilegious thing. How can you commit suicide? No, it's not going to happen in my district. The King's Osman was arrested and locked up. What's the lesson? Procrastination. It is why he could not honor, he killed himself eventually because he brought dishonor to his lineage. Even his son killed himself because he felt his father could not hold up to the value of, something so prestigious. Because if he had laid down his life at the right time, everything would have gone smoothly. He would have had, and he said something in a particular scene. He said the white man should release him because he needed to pass on some information to his son so that the son can carry on the tradition. But he couldn't do it because he was already locked up. The lesson here is, let's not procrastinate on taking the decision. Let's act now. We've heard it. We'll ruminate over it. We are available to guide you through the process. Thank you very much, everyone, and have a very good day.